Now Taxes is 100% free when you file in the TurboTax app if you didn't file with us last year.
Oh, yeah?
Yeah, just do your own taxes in the app by 2/18.
What if I have lots of forms?
All good, all 100% free.
What if I had 3 jobs?
Still 100% free.
What if I once saw Bigfoot?
That has nothing to do with taxes, so still 100% free.
Now that's what I'm talking about.
Now this is Taxes. See if you qualify in the TurboTax app. Excludes TurboTax Live, must start and file in app by 2/18.
Now, back to the Larry Kudlow Show.
Big week for stocks. Very good week for stocks. Yesterday, up over 300. The Dow was up 1,549 points for the week. So there was some slumpiness going on, but it looks like a big comeback. And interest rates went down. The 10-year looked like it was going to 5%, but it settled a lot lower. Let's see, 462 on Friday. So let's bring in my pal Kenny Polcari, managing partner at Kace Capital Advisors and chief market strategist at SlateStone Wealth. What do you make of it, Ken? Looks like a much healthier market. I just want to say, you know the market. I don't know the ins and outs anymore. I'm not sure I ever did, even when I was in the market, but whatever. The point is, I think one factor here, Trump's nominations for the cabinet have sailed through, basically. The Democrats throwing all this nasty personal stuff at them. Didn't matter. They sailed right through. I think, people are looking at Trump's going to get his agenda, and part of his agenda is going to be lower taxes and deregulation and more energy production, which really is bullish for the stock market. That's just my one little thought.
Yeah, no, and I think you're right. I think it is bullish for the stock market, and I do think that those nominations that we saw last week will sail through. I think they're all great nominations. I'm excited about it. I think broadly investors are excited about it. But I think the action in the market was really, it has been and will continue to be, I think, just a little bit anxious over ultimately what's happening with the economy, what's happening with interest rates, what's happening with inflation, right? And while we got ourselves to kind of maybe an oversold position after the NFP report and it was stronger and everyone was, nervous, now there's no rate cuts and blah, 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 then turned into, at least we're getting one rate cut after we got the PPI and CPI this past week, which is kind of interesting, Larry, because they didn't make a big deal about it, but PPI was, in fact, hotter than even the estimates, and that leads CPI, right? So we can expect CPI next month to be hotter based on what the PPI did. This month's CPI was reflective of last month's CPI report, right? So it's kind of in line. It wasn't dramatically lower, but it wasn't hotter either. So that gave everyone the idea that, oh, well, it's great. Everything's back on. We're going to get rate cuts and, galore, and the market's going to be great. And I think that's just a little bit premature.
Well, I think you're right. Numerically, the numbers, the CPI, the last 12 months, 2.9%. So their target is 2.
Right.
And actually the core is 3.2. But the last 3 months, the CPI is 3.9 at an annual rate. And then your PPI, you're correct, 3.3% for the past 12 months. I mean, that thing's been rising. The same thing for the 3 months. So the Fed should just do nothing. Just stay the heck out. Go home. John Carney mentioned in the prior segment, Scott Bessent wants people to come in and work in the federal government. But in the case of the Fed, I would say they should not work. Go home. Don't come in. Go down to Florida, play golf, wherever they want.
I agree with you.
Stay out of it, man. Just stay out. Whatever they do is wrong anyway, but just stay out of it. Do nothing.
I am exactly in that camp. I'm actually in the camp that we're not going to get a rate cut this year, unless the data suddenly starts to go off the edge, which I don't see that happening right now. So I don't think we're getting a rate cut, and I think the idea that we're still getting one in either the late spring or early summer is still a bit premature, which doesn't mean that the market can't function. The market can actually function with 4.5% and 5% rates as long as the economy's strong and they have inflation under control. The problem is going to be is if the economy's strong and inflation starts to rear its ugly head, then that will be a problem, right? Which we don't want to happen.
Well, I think profits look pretty good. I follow Eddie Ardeni profits look good, and profits are the mother's milk of stocks. I mean, if there was a collapse in the economy and a collapse in profits, that might be different. But the economy's not collapsing, and profits are not collapsing. So,
agreed.
Agreed.
So the Fed should do nothing.
Mm-hmm.
We're in a place where the Fed should do nothing.
I mean, if the economy, just hypothetically, before the Trump policies take effect, let's just say right now the economy is 2.5% to 3% growth, and the inflation rate is likewise 2.5% to 3% growth.
Yeah.
That's really, you add them up, you get nominal GDPs like 5.5%. In round numbers, could be as high as 6, could be as low as 5. That's where the 10-year is below that. If anything, it's not that tight. I always used to use that as a rule of thumb, that the 10-year should be roughly in line with nominal GDP. Right now, the 10-year at 460-something is less than nominal GDP. So I don't think the Fed is that tight, but they just have to wait for the Trump policies to get through.
100%. I agree with you, which is why I think the Fed really has to sit tight. And look, what was interesting is this past week, we were continuing to get kind of mixed messages, but there were three of them, Williams and Chris Waller and Austin Goolsbee, that are very much dovish, and they're telling everyone, we're going to get more, we're going to get more. Meanwhile, you had Beth Hammack, who's the latest, she's a Cleveland Fed president, who's the latest one added to the list, who's very on the opposite side of that argument, saying, whoa, guys, slow down. There's no reason to do that.
She's right. She's got the story right, the other side of the story wrong. I'm disappointed in my friend Chris Waller. I that was my choice when I was running the NEC. President Trump signed off on it. He should be tougher coming from the St. Louis Fed. Jim Bullard, the old president of St. Louis Fed, now at Purdue. Should be tougher. Don't rush it. Let it be. If it's not broke, don't fix it. Right now, things look kind of healthy, and there's a Trump bump in the animal spirits, right, and small business confidence. Don't mess with it. Don't fiddle with it. Stop trying to fine-tune it. You know what I mean? I 100%. Hate that fine-tuning, right?
And I don't think they should, and nor do I think rates at this where they are currently. I don't believe they're restrictive. The way some of them think are restrictive. If rates were really restrictive, the economy, job market, profits would not be as strong as they are.
All right. Ken Polcari, thanks, folks. Quick break, and David Harsanyi from National Review is going to talk about the Israel-Hamas deal. I'm Kudlow.